Now, strapped to a roller coaster, the global markets are riding a wave of volatility, battered by the crisis in Japan and pushed to and fro from the turmoil in the Middle East. But in a time of geopolitical uncertainty, there are opportunities for those who are willing to indulge an appetite for risk. Well, my next guest is the president of a hedge fund with around $4 billion on their books. He's Stephen Siderow, co-founder of BlueMountain Capital Management. Welcome to The Last Word. Stephen, how do you work when there's so much volatility around? What do you do with your assets in a situation like this?
Well, it's a great question, and thanks for having me on. The short answer is that we try to build a portfolio that is fairly robust to a variety of macroeconomic outcomes, but really not leveraged to any particular macroeconomic outcome or, volatility perspective. And I think this is a great illustration of it in the sense that going into this period, we were very much cognizant of our own, what I would say, our own ignorance of what might be the actual outcomes of some of the events that we're seeing. And so we wanted to make sure that while we remain nimble, we didn't have a large bet in any one of these areas, but at the same time found ways to generate returns from more micro relationships in the market rather than taking a view, let's say, on the price of oil or inflation or any of these other macro factors, which admittedly are very interesting to discuss on the air, but harder to actually generate consistent returns.
Indeed they are, because I was actually just going to ask you about the price of oil. I mean, it has been very volatile. We're seeing a huge difference. We've got what's happening in the Middle East and what's happening in Japan, two huge events that you couldn't have anticipated coming at the same time. When you look at the price of oil, is it just too hard to make a call as to where it's going to go next?
Well, I think that it is, actually. It is, from our perspective, not a call that we'd want to make in our portfolio. What we'd rather do, and actually what we did prior to these events, is think about our portfolio in an environment of $150 barrel oil and make sure that the portfolio would perform well enough in that environment and that we had trades on that would return. So, for example, we made some bets on some particularly oil-sensitive companies and got short those names, but that wasn't where the whole book was positioned. And similarly now, as we look forward and we recognize that the outcome of what's happening in the nuclear power industry may affect things like broader utility markets, the market for coal, the market for oil and gas, impact on the steel industry, and then from the steel industry, the auto industry, we now want to think through those scenarios and make sure our portfolio is robust to the variety of outcomes, whether we have a nuclear power, whether nuclear power as an industry stalls, or whether it continues on after, reconsideration.
Stephen, it's fascinating stuff. Thank you very much indeed for joining us today.
It is a pleasure. Thank you.